Good afternoon, ladies and gentlemen, and welcome to this week's session where we look back at the trading and possibly come up with a few ideas for the week ahead. So I'll just get rid of this screen and we'll start off there by looking at the results. So all the trades are closed at the moment. I'm not going to add anything today. For me, it's been a difficult week. A difficult week to really get a firm bias on where the markets are going. Early in the week, as you will have seen from the bias of the trading from the short side, my belief was that the market was headed lower. That didn't happen on Monday, probably less so even on Tuesday. So we had a tough start to the week, and then a promising start today has kind of eroded, and we've ended up with a day that's pretty much flat. Could have been worse, with the Dow down, or Dow futures down about 150 points before the opening bell in New York. So we rallied up into the close of that, which managed to offset some of the losses potentially that I was facing. But as I said, it was a difficult start to the week and a difficult end. So we had a couple of positions carried over, a Dow and a euro dollar trade. The Dow eventually had a profitable return. The euro dollar trade lost the best part of 100 pips. I was short from the closing price last week at 118.28. And stopped that trade out above 119.20. At 119.25 earlier this week. Gold. I've divorced myself from gold during the course of the week, but still managed to cost or hurt myself on two trades on Monday, totaling about 380 pips on those two trades. So that's the reason for the divorce. I think it's fairly obvious to see. So as I mentioned, that it wasn't a great start to the week on Monday, with the carried over trade and the two gold trades down 170 points, fairly flat on Tuesday, but a couple of noticeable stops on DAX as well. Much better Wednesday and Thursday, and what looked like a very promising day today has ultimately turned around and finished up fairly flat as well, but happy with the 305 pips that we've seen return on the week. The summary, as we go through the summary in terms of what trades have worked out during the course of this week, you obviously can see there at the top that gold, 3 trades, $353 worth of a loss. Not something that anybody is going to be able to continue for too long. So the intraday volatility in gold, it continues to be crazy, and if you see profit, it's important that you take it and take it quickly. Dow trades very profitable, and the DAX until today were equally profitable, but with a couple of trades that went against me early this morning, not so at this particular point. So that's just the summary of the week. As always, please ask questions. I'm going to try and explain a couple of things that I did during the course of today and earlier in this week as well. But as I've already mentioned, 305 pips or points to the better this week. Another profitable week. So while it's been consistently profitable, there's not any of those jaw-dropping returns that we would have seen back in March and April. And that's one of the things, that when volatility was high and the markets were bouncing around, and we were seeing huge intraday movements and movements in both directions, the returns were exceptional, and then trying to get people used to a more normal return after the return to normality, if that's what we have, is very difficult to do. But 305 pips is a good return. If you were trading with a 100 pip stop and 3% risk, you're looking at a 9% return on the week. So absolutely no harm with that, and it'd take you a year in a bank to get that sort of return. So can't complain, but it certainly isn't as jaw-droppingly spectacular as some of the results that we had in previous weeks and in previous months. So the markets as they are at the moment, the gold, as I've already mentioned, is moving fairly dramatically in both directions this afternoon. We fell away to 1910. We've rallied back towards about 1940, and are in the middle of that range, or probably slightly to the upper end of that range at this particular point, but still very, very volatile, and not something that I want to be getting too heavily involved in at this particular time. One of the things that's been, and please do send in questions if you have anything that you'd like me to look at in particular. One of the things that has been quite noticeable during the course of this week is that the DAX has outperformed. And the reason for some of that outperformance is the return to some manufacturing capability within Germany, and positive numbers in that regard. I think today that probably changed around a little bit. The manufacturing flash numbers were good. The services numbers weren't quite as good, but as those numbers started to get digested by the market, we've seen a fairly dramatic sell-off in the DAX, certainly more dramatic sell-off in the DAX than we saw in the Dow. The Dow's recovered and is now trading positively for the day. The DAX is still down considerably from where we were first thing this morning. So one of the first things that I wanted to talk about firstly was the initial sell-off in the Dow this morning. I'm just going to bring up the details from Forex Factory, and you can see there you've got the French Flash Services PMI, a miss there. The number that they were looking for or forecast was 56.3, returned 51.9, and that was a miss. So at 8:15 our time, UK and Irish time, we saw a sell-off in the DAX. Now I was already I was long the DAX at 12,900 from before the open, and as the market was falling away and getting close to my stop, you have a decision to make. And I was obviously, as you saw from my market comments this morning, I was aware that the German flash manufacturing PMI numbers, the German flash services PMI numbers were due out at 8:30, and that was the reason for the position. I thought they were going to be positive or have a slightly more positive bias, and I wanted to be long the market. So at 8:15 the market's only genuinely been open 15 minutes, and my position is in danger of closing out. So rather than allow it to close out, what I did is I initiated a new position at 12,830. And move my stops a little bit lower. The one thing I hate more than anything else, and sometimes it's most definitely to my detriment, if I put a trade on in anticipation of a market move, the first thing I want to happen is I want that market to be open. So I don't want to be stopped out before the European opening bell when I put a trade on that early in the morning. And secondly, if there's a number that's coming up that I've identified as being or having an opportunity to add to that positive bias, I want to wait for that number. So when the French numbers came out at 8:15 this morning and we had that sell-off, that was the worst type of scenario for me. The DAX had opened, right? So one of the measures I was looking for was ticked off, but we hadn't got as far as the German numbers at that time, and that's why it can be seen as doubling down. I hate to use that phraseology because it becomes more of a betting type of terminology of anything. But what I wanted to give that trade a chance, so I would have reduced the extent of the stop on the two positions, but allowed me to see what the numbers were going to be and what the market reaction was going to be. And the market reaction was good. The services number came in lower than expected, as you can see on the screen there, but the manufacturing number, the reason for some of the resilience this week, was better than expected. Now marginally so, but there was an immediate tick up in DAX futures, and we traded back up towards the 12,900 level. The one thing that I'm left kicking myself about at this particular point in the afternoon and earlier in the day is, as you can see there, if we bring the DAX up and we put a put some form of line into this market, you can see that we traded all the way back up to 12,924 after that initial trade. Let me just use some crosshairs here. So after those initial trades lower, after the opening bell and those and that manufacturing, we're here. So we traded lower and then we've rallied back up to, let me bring this line down, sorry. So you can see there that we've, so this is the initial trade off after the French flash numbers came out. So the initial sell off there. But we've traded back up to 12,907, 12,910 on 3 occasions. And when your trade has been in a loss-making position, I think it's human nature that once you get back into the positive zone, you're looking to take profit from that particular trade. I think with my 30 plus years of experience, and some of it very hard learned over those 30 years, when you get yourself back to break even, you need to seriously consider whether you close that trade. The market may continue to move in the direction that you wanted it to, and you may have a fantastic return. But I think more often than not, and probably 7 times out of 10, you've been very, very lucky and take the break even. There's many occasions where I look at how far a trade has been against me, how the market is then performing, or how I've then got back to a break even or close to a break even level, and I'm happy to take that. There's no wishful thinking, there's no worrying about how much profit maybe I could have eked out of it. I often look at the move in relation to how my day is performing. So if I'm having a good day, I might take a small loss on the position, so before I get to break even, and I'm just grateful that I'm not suffering the bigger fall that we saw earlier. Now the fall earlier today was about probably 60 to 70 pips to the downside, but as you can see, in not taking those 3 opportunities to close the trade out at 12,900 break even, 12,905 a 5 pip profit, or 12,880 with a 20 pip loss, has meant that when the German market has sold off aggressively. My stops have been triggered at 12,750, and the combined loss on those 2 trades was just over 200 pips, which obviously would have made a considerable difference to the trading day today, and would have put the total pip gain back to 505. So it is something that everybody experiences. A loss-making position, it turns itself around. At what point do you get out of the trade? And it doesn't matter whether somebody's got 30 years experience or they got 30 minutes worth of experience. It's probably the most common mistake people make when they're looking at their trading and having that anticipation that they're eventually going to be able to turn a profit. I do recommend that as soon as you get close to the level, you seriously consider closing the trade out, and just be grateful that you're out of the trade and that you've got the capacity to then go back into another trade. So if your stop's not triggered and you rally back up to those levels, unless there's a real fundamental reason for you to continue with the trade, I do recommend that you seriously consider closing the trade at that particular point. So there's a few questions there about what I expect the markets to do from this particular point and going forward. I think technology is the key, or technology stocks are the key issue for the markets over the next 6 months. They've had a tremendous rally. Can it continue? It's continuing most days at the moment as we set new record highs in the Nasdaq. The S&P 500 has rallied to a new record close on at least one occasion during the course of this week. So equity markets are back where they were pre-pandemic, the exception being the Dow Jones, which is a bit of a laggard in that regard. It hasn't rallied quite extensively. and that's largely because of its smaller exposure, if you like, to technology stocks. Technology for me, everything's gone online over the last number of months. Everybody's been shopping more online than they ever have been in the past. Profits or earnings have catapulted through the roof. Valuations of many companies are at very extended levels, and you have to believe that a correction is coming. The timing of that correction, of course, is the key, but corrections aren't a negative for the market. They're part of a normally functioning market, and I think it's or there will be occasion over the next couple of quarters where that will occur. Perhaps the earnings of these technology related companies will reach a peak, and then we'll see a sell-off from those levels, and it could be fairly dramatic. It could have some form of bubble type sell-off that we've seen in the past in relation to technology stocks, but not with a similar sort of basis. So it's something to keep an eye out for. I think technology will be the first sign that possibly these markets are turning around. But if we continue to see spikes in in coronavirus and people continue to work from home, and there's more online shopping than we've seen, or the continued online shopping that we've seen over the last number of months, then the potential for the rally to continue is still very much there. So it's very fluid in that regard. Obviously, we have the election that's coming up in the US in the next 11 weeks, I think it is. Have no idea who's going to win. I'm completely apolitical. Didn't expect Donald Trump to win last time, but he did, so I'm not making any forecasts this time. But with the markets at the levels that they are, with these record closes, you would have to believe that the situation is probably improving, or improving over the last number of weeks for Donald Trump, as opposed to where the markets were during the onslaught of the pandemic in both March and April. Gold. Do I know where gold is going? Absolutely not. I think it's something that I'm going to let rest for the next few days, maybe the next couple of weeks even, and just see how it reacts, and look for the amount of intraday volatility to reduce somewhat. I think at these extreme levels, it's far too dangerous for me to trade, and it keeps teaching me a lesson, and one hopefully that I've finally learned. I'll leave you there for today. Anybody's questions that I didn't get round to so far, I'll do my best to send you an email over the next couple of hours, but we'll close there. 305 pips of a profit, a decent return, and a continuation of the positive returns that we've seen now for a number of weeks. Thank you very much for joining me.